Welcome back to my channel. This is The Right Property, where I bring you information before deals. We all know we need information before we go out there doing deals, especially when it comes to real estate deals. My name is still Yemi Adegorite. Thank you for joining me. So today we're going to talk about hidden money that you keep losing in real estate. This channel is all about you getting to the top, but you can't get there when you keep losing money you don't even know you're losing. All right. So we're going to talk about the banks and how they keep taking money that you don't even see. All right. Starts from when you walk into a mortgage broker's office. You want to buy a house. They start talking about amortization, interest rate, terms, all that stuff. It's it's just the bank's terms for different ways to get into your pocket. All right? So let's talk about amortization. One thing I want you to know is the longer your amortization, the more interest you pay. You may have a lower amount of monthly payments, but the bank is going to take way, way more money from you. So if your amortization is 25 years compared to 30 years, we're talking about thousands of dollars difference. And the difference in what you're paying per month may not even be $500, but they stretched you out to 30 while someone is doing 25. All right? So when you hear amortization, you want to do as short as possible. And that brings us to interest rate. We're talking about fixed and variable. Is the same thing. Fixed gives you stability, gives you prediction. You know when you're due. Whatever is going on in the world, you don't have to worry about it. When you're on variable, you have to worry. If there's a war breaking out, like we have at the moment, that affects your variable. Goes up, goes down, goes up, goes down. And locking it in, I know mortgage brokers will tell you you can lock it in anytime. It's not even that easy. Maybe you're a first-time home buyer, you want stability. You don't want to be having to think about life and then think about your mortgage every single day. Okay? And right now, the bank's killing people with what we call appraisal. You've bought your house, you've signed all the paperwork with the banks, you're looking at closing day, appraisal comes in short. You bought the house 1 million, and now they say it's what, 800,000. You've not even moved in, and they're telling you your house is less 200,000. The bank still wants your 20% on the 1 million, and then the extra 200,000 they tell you to go bring that, add it to the deal, or the walk. And if you don't have it, that's it. The deal is dead. The bank is in all this for the money. They're not there to help you. So watch out when people start talking about, appraisals, and that's left on you on what you buy. Okay? If the house is already overpaid for and you're thinking you're getting a deal because they're taking 100,000 off or something like that, it may not be a deal. So make sure what you're getting is a deal before you start the process of closing, or you may be surprised. And then we come to the renewals. Now you've closed, you've moved in, everything is good. In Canada, this doesn't happen in the States. This happens in Canada, Australia, New Zealand, and one other place. It's just the big five, they call them. These are banks operating in all these countries. Just 5 banks in all these countries are mentioned. And they put people on what we call renewals. Okay? Renewals is like, for me, I just call it like a mafia. The banks are cartels at this point. They give you a loan, 5 years later, the same loan, they increase the interest rate. Some people working in the bank don't even know why that is happening, but it does happen. So watch out for renewals. You want the longest renewal possible. That's why you want a 5 years term. If they have longer, you take it. The US, once you close your deal, whatever your amortization is, that's the end of your term. But in Canada and all these other, developed countries, they give you a 30-year term and they break it up in fives or sometimes even in threes. But the way they steal money from your pocket with that is at the end of every term, if you don't pay off that mortgage, they get to front load their interest. So at the beginning of a new term, a new 5 years, you get to pay the banks more. And then towards the end of that 5 years, your principal and your interest is almost balancing, and then it's time for another renewal. And guess what? At the beginning of that renewal, interest goes up and principal goes down. That keeps you paying, paying. And that's why at the end of your whole mortgage, you end up maybe giving the bank 1.5 house while you get to keep 1 house. So you've paid for 2.5 houses. And that's how they get that. That's one of the ways you lose money. And how do you avoid that? You want to do early payment. No, no, no. They don't want you paying early because they fine you and they put penalties on you if you try to pay off early. The bank gives payment privileges so that you can pay off a certain percentage of your mortgage every year. But the funny part of that is if your privilege is 10% this year and you try to pay 12% or even 11%, they fine you still. So it's a money they give you. They want you to pay off, but they don't want you to pay it off early. On this channel, this is what I do. I try to show you all these loopholes before you even get into deals. All right? Because on this channel, all I want to do is see you at the top. If you have questions, if you have comments, please drop under this video. And if you have any suggestions of videos to do, please drop a comment as well. Share my video. And if you haven't subscribed, we are going to 200. So we want to hit 200. Subscribe. Because on this channel, all I want to do is see you at the top.